Ladies and gentlemen, today we're diving into what's happening in China's electric vehicle market, because the numbers we're seeing right now are both fascinating and crucial for understanding where brands like NIO, XPeng, AITO, and others are heading. China's EV scene is entering one of its most competitive phases ever. Deliveries are rising fast, government incentives are fueling momentum, and automakers are pushing hard to claim a bigger share of the market before the year ends. But even with all this progress, there are still challenges ahead and opportunities waiting to unfold. So, let's unpack the latest retail figures, what they mean for the broader NEV new energy vehicle industry, and how leading players like NIO are positioning themselves for growth and profitability as 2025 winds down. This is not financial advice. Please do your own research. As of October 26th, retail sales of new energy vehicles in China had reached around 901,000 units, which was almost flat compared to the same period last year. That means there hasn't been a dramatic increase or decrease, the market remains steady. But when we zoom out and look at cumulative sales for the year, the story becomes much more encouraging. Total NEV retail sales have now reached 9.77 million units, up 22% year-on-year. That's a clear indicator that, even if certain months appear stable, the overall growth trend for China's electric vehicle sector is still strong and upward. However, there's still a bit of ground to cover. China's official projection for NEV growth this year is 34%. And with only 22% achieved so far, automakers and policymakers will have to push harder to hit that number. Still, it's not out of reach. The last quarter of the year typically brings a surge in consumer activity as families prepare for the festive season. Culturally, it's a time when many Chinese buyers prefer to make major purchases, cars being one of the most popular choices. Combine that seasonal demand with ongoing subsidies and local incentives, and you get the perfect storm for a strong sales rebound heading into year-end. This festive season effect has always been a powerful force in China's auto market. As the end of the year approaches, buyers hurry to secure available discounts, tax breaks, or local government support programs before they expire. For many, it's a way to start the new year fresh with a new car and renewed optimism. This year, that motivation is even stronger for NEV buyers. Government incentives for cleaner, greener vehicles remain generous, and several provinces have extended their subsidy programs specifically for electric and hybrid cars. This gives both consumers and automakers the confidence to push for more sales in the final stretch of 2025. Now, let's talk about performance. Within the NEV space, a few brands are absolutely dominating this year. While the industry average sits around 22% growth, companies like XPeng have achieved over 200% year-to-date growth, which is remarkable by any standard. Meanwhile, NIO has recorded an impressive 40% increase so far, nearly doubling the industry average. This reflects how well the company has managed to stabilize production, strengthen deliveries, and rebuild consumer confidence despite economic headwinds. On the other hand, AITO, which had been a consistent leader in the past, has faced some unexpected challenges. Their deliveries have dropped compared to last year as some of their newer models struggled to gain traction. It's a clear reminder that in China's ultra-competitive market, momentum can shift quickly. Meanwhile, Xiaomi Auto, Leapmotor, and AITO have emerged as rising stars. Xiaomi's entry into the EV sector has stirred up enormous excitement, especially among tech-savvy customers, while Leapmotor and AITO continue to attract strong attention for their blend of affordability and innovation. Taking a closer look at NIO, the company remains one of the key players to watch. In 2024, NIO sold about 221,000 cars, and earlier projections for this year were extremely ambitious, aiming for around 442,000 units. But with market shifts and production adjustments, that figure has been refined. The company is now expected to finish 2025 with roughly 350,000 deliveries. From January through September, NIO had already sold 205,800 vehicles, meaning that with strong Q4 performance, it can easily hit that revised target. That would represent a healthy year-on-year jump and put NIO in a strong position heading into 2026. For most investors, though, the big question isn't just about deliveries, it's about profitability. NIO's CEO, William Li, has made it clear several times this year that reaching profitability is now the company's top operational goal. Internal discussions and official statements have reinforced this priority, marking a strategic shift from pure expansion towards sustainable financial health. To achieve that, NIO has been focusing on improving efficiency, reducing costs, and optimizing its product lineup while maintaining its premium standards. These efforts are already starting to show results. NIO's investments in battery swapping infrastructure, in-house chip development, and smart manufacturing have been massive, but they're now beginning to pay off. These systems give the company an edge in user experience and brand loyalty areas that can't easily be replicated by competitors. So while profitability might not come overnight, it's becoming increasingly clear that NIO is on a trajectory that could deliver long-term financial stability. From an investor's perspective, NIO's position offers both reassurance and opportunity. While the company may not be doubling sales like XPeng, outperforming the market average by nearly 20% is still significant. Long-term investors understand that consistent growth, coupled with operational improvements, tends to pay off handsomely once profits begin to flow. Even if the share price isn't reflecting all of that progress just yet, patience might be the best strategy for those who believe in NIO's long-term vision. Zooming out to the broader NEV market, it's clear that the divide between the winners and the strugglers is becoming sharper. Automakers like NIO, XPeng, Leapmotor, and AITO are capturing market share by leaning into innovation and technology. They understand that in today's China, customers care deeply about software, AI features, range reliability, and design, not just price. Meanwhile, brands that fail to innovate quickly enough risk being left behind. Li Auto's slowdown is a reminder that even well-established players can falter when timing and market trends don't align. This final quarter of 2025 will be a decisive one. For NIO, hitting that 350K unit milestone is critical, but equally important is maintaining production and delivery momentum into Q1 2026, a period when demand traditionally softens. To manage that, NIO has been proactive in its customer communication. For example, buyers of the new ES8 have been assured that they'll still receive the full government subsidy incentive even if their cars are delivered early next year. That smart move helps keep orders flowing and ensures smoother factory operations during what's usually a quieter quarter. The bigger picture, though, is even more exciting. China's EV industry continues to evolve faster than almost anywhere else in the world. Even with overall growth slightly below projections, the progress being made is undeniable. Automakers are competing not just on volume, but on experience, technology, and ecosystem integration. This competition is what's driving the country toward a cleaner, smarter, and more sustainable transportation future, one that's already influencing the global auto landscape. To wrap things up, China's NEV sales have now surpassed 9.7 million units this year, growing 22% year-over-year. The target of 34% may still be in reach thanks to strong seasonal demand. Companies like XPeng and NIO continue to outperform, while Li Auto faces a temporary slowdown. NIO is on track to deliver around 350K cars this year, a massive leap from last year's 221K, and its focus on profitability shows that the company is thinking long-term. While short-term market sentiment might remain cautious, the fundamentals are pointing in the right direction. As 2025 comes to an end, it's becoming clear that the Chinese EV sector isn't just expanding, it's maturing. Brands are refining their identities, consumers are becoming more informed, and the overall ecosystem is stabilizing. The companies that can balance innovation, scale, and profit will ultimately lead the next wave of growth. NIO, XPeng, and a few others are proving that they're not just surviving in this market, they're shaping it. So, what do you think? Can NIO hit its 350K delivery goal this year? Will China's NEV market hit that 34% growth target before year-end? One thing is certain, the demand is rising, the technology is advancing, and the competition is heating up. The next few months will tell us a lot about which brands are ready for the future and which ones will struggle to keep up. Thank you for joining us today. If you enjoyed the video, don't forget to hit the like button and subscribe to our channel for more stock predictions and market insights. Remember to turn on the notification bell so you never miss an update. Happy investing, and see you in the next video.